I'm Doris and I'm here to share with you about my stock account updates. Today my stock account has earned $1,726 US. The Nasdaq and the S&P 500 closed lower, while the Treasury yields continue to climb. And we're going to do a quick review of US stock companies. In my account today, it has earned $2,657 US in the post market. That's a gain of 3.41%. So right now the net asset of my account is $80,617.89. Today's PL in SQQQ is a gain of $1,482, and in the morning it rose to 40.07. As for DRV, it made a gain of 4.31% during the market to 50.07, and a gain of 0.56% in the post-market. As for the market today, Dow Jones Industrial Average made a small gain of 0.02%. Nasdaq Composite made a loss of 0.66%, and the S&P 500 made a loss of 0.46%. Today, oil and gas made a gain of 2.38%, and on the other hand, the utilities regulated electric made a loss of 1.71%. Wall Street closed mixed on Wednesday. Treasury yields continued to rise, with the 10-year Treasury yield rising above 4%. The US ISM manufacturing index came in at 47.7 for February. Two Fed officials said inflation was too high, suggesting further rate hikes in the future. The Dow rose 5.93% or 0.02%, 5.93 points or 0.02% to 32,662.67. The Nasdaq fell 76.06 points or 0.66% to 11,379.48, and the S&P 500 fell 18.63 points or 0.47% to 3,951.52. US Treasury yields continued to climb on Wednesday. The 1-year yield topped 5% and the 10-year yield topped the psychological 4% mark for the first time since November. Traders have been looking at the negative correlations between the US stock and the benchmark 10-year Treasury yields. Technical graphics analysts say 4% is not an important resistance level, but it is important in terms of implications on investor sentiment. Technology and growth stocks are particularly sensitive to the direction of 10-year Treasury yields. The rise in the yield has sent technology stocks generally lower. The Fed will announce its interest rate decision on March 22nd. Bond strategists predict that the 10-year Treasury yields ahead of the Fed meeting will continue to rise. Any strong inflation or even employment data could be catalyst for the yield higher. Wells Fargo's Michael Schumacher said the 10-year Treasury yield could easily break above 4.2% in the near term. Fed officials' comment drew market attention. Minneapolis Fed President Neil Kashkari said Wednesday that inflation was very high and the Fed's job was to reduce a target of 2%. So far, the Fed hike has not reduced inflation in the services sector. We want to avoid a recession, but reducing inflation is a top priority, Kashkari said. At the next meeting of the Fed, I am open to raising interest rates by 25 basis points or 50 basis points. In December, my view was that the Fed needed to raise rates to 5.4% and stay unchanged. Mr. Kashkari said he was inclined to keep raising interest rates. Atlanta Fed President David Bostic said U.S. inflation remains too high, and the Fed must beat inflation. He says he needs to see a greater restraining effect of monetary policy on demand, and that wage growth must slow before we can conclude that inflation is steadily falling. Mr. Bostic says the Fed's task of fighting inflation was not complete. In February, the 3 major U.S. stock indexes recorded loss. with the Dow down 4.19%, the S&P 500 down 2.61%, and the Nasdaq down 1.11%. After a February decline, the Dow had fully given up its gains into 2023 and turned down. The S&P 500 index and Nasdaq still retained some gains. Global Investment Senior Portfolio Manager Keith Buchanan said, the decline of the three major U.S. indexes in February marked a turn for the rebound in January, partly due to heavy employment data released on first week of February. The report showed U.S. non-farm payrolls rose to 517,000 in January, or above the 187,000 estimated by economists surveyed by Dow Jones. Buchanan said, there's a turning point that we can all see. In the market at some point, participants realized that perhaps the labor market was tight enough to lay the stage of continuing to strengthen the hawkish stance. On the economic data side on Wednesday, the final U.S. market manufacturing PMI for February was 47.3%, compared with 47.8 expected and 47.8 expected last. The ISM manufacturing index for February stood at 47.7 versus 48 expected and 47.4 last. A recent series of mixed U.S. economic data has led to a repricing of hawkish Fed expectations, particularly after U.S. durable goods fell 4.5% in January, raising concerns about potential soft landing. The Conference Board Tuesday Consumer Confidence Index fell sharply to 102.9 in February from 106 in January, and 107.1 last month. Bank of America Global Research believes the Fed could raise interest rates to nearly 6%, maintaining mainly as the demand of U.S. consumer market and tensions in the labor market will force the Fed to raise interest rates and fight inflation for longer. Bank of America said, total demand in the consumer market needs to weaken significantly before inflation can return to the Fed's target. Further normalization of supply chains and a slowdown in the labor market will partly help ease the current inflation, but it'll take longer to achieve this process than we and the market expects. In terms of overseas economic data, the website of China National Bureau of Statistics released the operation of China Purchasing Managers Index in February 2023, showing that the Manufacturing Purchasing Managers Index PMI stood at 52.6% in February, the highest since April 2012, up 2.5 percentage points from the previous month, above the critical point, and the manufacturing business level continued to rise. Quick review of U.S. stock companies. Tesla is preparing to renovate its best-selling Model Y model, involving the exterior and the interior of the crossover electric car, and aims to begin production in 2024. Media sources were quoted as reporting. The internal code name of the renovation plan is Juniper. Novavax Pharmaceutical warned on Wednesday that its 2023 revenue, U.S. government funding, and pending arbitration are highly uncertain, and its ability to continue its business operations is in doubt. Apollo Global Management is rumored to be considering buying Alka Inc. Riata is FDA approved for the treatment of genetic diseases. Caterpillar struck a tentative agreement with the union to avoid a strike. AMC Cinema Lines lost widened to $287.7 million last quarter. The CEO said it will not continue to cut jobs. Reviewing this year's production target is far behind expectations. Virgin Galactic fiscal fourth quarter net loss widened to $151 million. Caps Energy fourth quarter revenue below market expectations. Automaker Stellantis is looking to buy a stake in Coppermine for $155 million. NIO's Q4 revenue in 2022 was 16.06 billion yuan, compared with market expectations of 17.265 billion yuan, compared with 9.901 billion yuan in the same period last year. NIO delivered 12,157 units in February, up 9% 98.3% year-on-year. Deliveries in the first quarter of 2023 are expected to be between 31,000 to 33,000 units, up about 20.3% to 28.1% year-on-year. Revenue is expected to be between 10.926 billion to 11.543 billion yuan, above 10.2% to 16.5% year-on-year. Ideal Auto announced that it'll deliver a total of 16,620 new cars in February 2023, up 97.5% year-on-year. Since the deliveries, the cumulative delivery volume of Ideal vehicles has reached 289,009 and 95 units. Xiaopeng Automobile delivered a total of 6,010 units in February 2023, down 3.6% year-on-year and up 15% month-on-month. Elsewhere in the market, gold futures for April delivery on the New York Mercantile Exchange rose $8.7 or 0.5% to close at $1,845.4 an ounce, the third straight session of gains. On a most active contract basis, gold future fell 5.6% in February, the biggest monthly drop since June 2021. West Texas Intermediate crude WTI crude for April delivery rose 64 cents or 0.8% to settle at $77.69 a barrel, the highest close since February 16. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.